You're listening to OPIS Talks, where you'll be in on conversations with insiders in the energy, chemicals, and environmental commodities markets. Guests share insights into the latest trends and innovations, industry challenges, and much more. Let's dive into the conversations that explore where the energy economy is headed, right here on OPIS Talks.
Hello, I'm Reagan Pritchard. I am the lead editor for the U.S. Gulf Coast distillates market for OPIS, as well as a contributor for the Worldwide Jet Fuel Report. You're listening to the second episode of our limited series on refined spot products. Today is July 8th, and we are talking about the impact of Venezuelan crude on the fuel dynamics between the U.S. Gulf Coast and Mexico. I am joined by two of our OPIS experts, Denton Cinquegrana and Karla Omaña. If you both could introduce yourself and tell us something you're looking forward to this summer. Denton, we'll start with you.
Hi, I'm Denton Cinquegrana, title is Chief Oil Analyst here at OPIS. I've been here for 25 years, so I think I've seen quite a few cycles here within the oil and refined products business and obviously the various U.S. spot markets. So I'm just looking forward to more exciting times in these oil markets. That's what's going on right now and has been much of the case for 2026, and don't necessarily expect that to change much throughout the remainder of the year.
Karla?
Thank you, Reagan. It's a pleasure to be here with you. I'm Karla Omaña. I am the Mexican editor for Mexico. I have been covering fuels and the energy sector in Mexico for more than 8 years. So it's exciting to cover this continuous changing market in Mexico. We have seen a lot of changing dynamics in the market, not only because of the Iran and US situation, but also in Mexico, we have seen a lot of recent energy reforms that have shifted the way that the market was behaving. So yeah, it's really exciting to see how the market is evolving during these months of the year, and also excited to see how we're going to end the year with this whole international conflict and the impact on international prices.
Thank you both. We'll get right into it. It's been 7 months since the U.S. captured former Venezuelan President Nicolas Maduro. While some touted this as an instant reopening of one of the most abundant oil fields, most industry experts, including those here at OPIS, noted that the decayed refining and shipping infrastructure will make for a much longer process to return to the 3.5 million barrel a day production rates we saw in the 90s out of that nation. Can you walk us through some of just 3 steps of what needs to happen before Venezuela becomes a more substantial participant in the global oil industry?
Sure, yeah, and again, I think with what's happened with Venezuela so far, I think it's been a little bit of a surprise to the upside. It's gone a little bit faster than at least I thought it would go. But the 3 things you need to really really focus on is, one, is it safe? Is it safe for a company in the United States to send their personnel to operate there? That's number one. Safety is first and foremost in a lot of situations. But second, who's in charge? I think we have the answer to that with who's running the country right now. And then the third one is, at the end of the day, who gets paid? How is the financial and economic regime set up? Real quick, those are just the 3 things that you probably need in place before you'll have a rush to really kind of fix, like you said, the infrastructure that's really been beaten up over the last couple of decades.
Thank you. Even with those infrastructural challenges, Denton, I think that a lot of us were very surprised to see the peak back in mid-May of 713,000 barrels per day of imports from Venezuela to the U.S., which is an 8-year high. It was pretty unexpected, but it has tapered down slightly. But what does the greater abundance of Venezuelan crude product spell for U.S. refiners today?
It's a really, kind of good relationship as far as, what refiners in the United States are geared towards running. Venezuelan crude is pretty much I wouldn't say ideal, but a very, very important grade of crude that U.S. refiners, particularly on the Gulf Coast, built infrastructure to be able to run that crude. So it's been kind of, like you said, some pops in imports here and there. You look at it on a weekly basis and it can be a bit noisy. But again, on the kind of monthly, in the latest monthly data from the EIA, does show Venezuelan imports of crude oil at the highest level since 2019. I know you referenced an 8-year high, and that was probably on a particular week where things really, maybe all the stars were aligned for a really high import number. But it's easy to see that the trend is pointing higher of more Venezuelan crude finding its way to the United States and particularly to the Gulf Coast refiner.
And let's examine a little bit more about some of those long range impacts. I think we are looking at those short terms that we started in January, but is this going to change where the Western Hemisphere or the globe sources their fuel? Is that going to dampen the market or shift fuel dynamics?
I think one of the things you really kind of notice, and we'll look at it just from a U.S. perspective, there's a lot of production here in the Western Hemisphere. You have the U.S. as the largest producer in the world, but also, obviously Venezuela bringing their barrels back to the world market, if you will, obviously under sanctions for a long period of time, but as if they could increase production, get up over 1 million barrels, 1.2 million barrels a day, which I think is probably considered the quote-unquote low-hanging fruit, getting to those levels. It's going to be the challenge, Reagan, that you mentioned early on, getting back to those levels of the 90s. But that being said, between Venezuela, Canada, the United States, let's not forget Guyana and Brazil, and of course Mexico. So there's plenty of production within the Western Hemisphere that'll probably most likely kind of stay in this area. I know we're talking about, kind of Mexico, U.S. and Venezuelan dynamics, but, Canada has a lot of pipeline projects that will help them expand their export capacity because much like the U.S., say 10, 12, 13 years ago when we had a takeaway problem with the shale revolution, that's kind of what Canada is experiencing right now. A little bit of a takeaway problem right now. 2 years ago, they expanded the Trans Mountain Pipeline, which obviously helped export more crude oil from Alberta, but some more projects, some more pipeline projects that could help, Canada on the world stage a little bit more as well.
I think also within that conversation, obviously Mexico has been doing a lot to try to increase their energy independence over the last 8 years. It is the largest importer of U.S. refined products and crude. Pemex, the national petroleum company for Mexico, has taken a much stronger role to achieve some of those goals and more of an aggressive approach. Karla, could you speak to some of the more significant development in the fuels market that we've seen out there over the last few years?
Yes, of course. As you said, Pemex remains as the dominant player in the Mexico fuels market. Its position has been strengthened over the last year, despite we had in Mexico a major energy reform implemented back in 2013, where for the first time the market was opening for private competitors in Mexico. Pemex now accounts for roughly 80 to 85% of the total country's gasoline, diesel, and jet fuel supply. And a major reason for that shift was the policy taken during the former administration of President Andrés Manuel López Obrador, because his administration was really focused on strengthening Pemex in the market. That also significantly reduced the number of private companies operating in the market. We passed from having more than 1,000 authorized companies importing fuels into Mexico from having less than 15 companies at the moment. At the same time, Pemex during these years have been increasing domestic refining supply capacity to reduce this dependency from the U.S. through the rehabilitation of its local refineries and also with the startup of the Bocas refinery. The company has increased gasoline production in nearly 72% between 2018 to last year, and diesel production also rose by 95%. The current administration has largely maintained that strategy with the recent 2024 energy reform, further strengthening Pemex in the market, while private participants continue to play an important role in other key sectors of the supply chain, for example, fuel marketers, distributors, and retailers.
Pemex isn't going after this alone. They're also making agreements with other companies. So most recently, they did sign an agreement between themselves and Petrobras. So how do these kinds of agreements influence these goals of energy independence for the nation?
Yeah, that's a really interesting question. The recently memorandum of understanding signed between Pemex and Petrobras is really interesting because it gives Pemex the opportunity to learn from one of the most leading deep water operators. So Petrobras has decades of experience developing complex offshore fields, an area where Mexico has substantial resources but limited expertise. So the most important part of this agreement is not like an investment commitment, but rather a framework for identifying future joint projects between both companies. So given Mexico needs to stabilize crude oil production and Petrobras expertise in offshore projects could become valuable if the company decides to move with other offshore projects. And also the timing is really important because Mexico is looking to increase its crude oil platform, and the government has signalized that Pemex will remain as the central player in the market, but still has been open to selective partnerships that can bring capital, technology, and operational expertise to the company. So in that context, I think Petrobras could become a valuable partner, particularly for Pemex, if it decides to move forward with more offshore developments. And just to talk you about briefly across several important areas of the agreement included deep water exploration in the Gulf Coast of Mexico, mature field development, petrochemicals, fertilizer production, and the exchange of technology and regulatory expertise. So
exciting things that are coming for that company. Even with these like future projects, I think currently there is still a huge market in the Mexican market for U.S. products, especially gasoline. The U.S. has been exporting a sizable portion of gasoline to other nations, with rates measuring over 1 million barrels per day, which is non-traditional for this time of year. For the first 6 months, according to EIA data, we also saw exports of gasoline from the U.S. to Mexico increase by 18%. Does this higher export rate spell lower supply for the U.S.? Does it point to greater demand coming out of Mexico? What does this kind of tell us? Denton, we'll start with you.
No, I don't think there's going to be supply issues in the United States for gasoline. There may be periods of tightness and, little spots here and there throughout the country that will experience tightness in the summer months, and that's nothing new. The refining capacity in the Gulf Coast, as you well know, is the largest in the world. We have plenty of refining capacity, plenty of capacity to suit our own needs, as well as export. And we're at the point where we do, when you talk about the whole energy dominance thing, from a refined product standpoint, absolutely, we export more than we import because of what's been happening with the war with Iran and the United States. There's been a few more customers that have been coming to the U.S. for gasoline than you might normally see under different circumstances. But suffice to say that the U.S. will continue to be a world supplier when it comes to refined products, whether it's gasoline, whether it's diesel. And you saw it happen with jet fuel earlier in the spring when jet fuel reached record levels of exports. And jet fuel yields went higher than they traditionally would be. And now U.S. inventories of jet fuel are quite comfortable. And you're seeing that reflected in some of the spot market differentials to the ULSD futures contract. So, when the world, it looks like when the world needs fuel, the U.S. refiner is there to fill that gap and ready to go. And obviously meet their own needs.
Thank you. And Karla, does this increase in imports of U.S. gasoline point to a greater demand for just gasoline as a whole, or is it just a sourcing situation?
I agree with Denton. I think it's just a moment situation. But what I can tell you is that Mexico still depends a lot on the U.S. imports on gasoline and diesel. That is a fact. Despite we have seen a shift on the imports from the U.S. in these recent years because of the Pemex increasing the refining capacity and those Bocas output. The fact is that we will still continue to import from the U.S. because we haven't seen a stronger refinery, operational performance from those Bocas. The past administration had this goal of becoming Mexico's self-sufficiency in fuels, but the country is still far from achieving that, and demand is likely to remain resilient.
Thank you very much. So how much domestic demand has Dos Bocas been able to supply as of late? I know that it started up pretty recently, but we've had a few things, some different incidents in the refineries causing low refinery utilization. So how much is this large refinery able to actually supply when it comes to Mexican domestic demand?
Yeah, well, we have seen that Pemex through the years have struggle to keep a highest performance rate in all these local refineries. And this year we have seen a couple of incidents that have also negatively impacted in the refinery's performance. Recently in May, we saw that the Mexico's refinery processing rate went down above the 1 million barrels day mark. We saw that almost all refineries in Mexico saw their crude processing down. Specifically, Dos Bocas passed from having an utilization rate of 70% in December to only 42% of its capacity just in May. So that gives us a sense on how Pemex is struggling to maintain these high rates of the refinery performance. And that's why we sometimes have to increase our imports from the US. And it's important to remember that Dos Bocas has been a project that it was really pushed from the government to reach this goal of self-fuel independency. But this Bocas has been, despite it was officially inaugurated in 2022, it became operational later until 2024. So Mexico is still having some troubles when having this new refinery at the top of its total capacity.
Thank you very much. With all of those things, so with the kind of new prospect of crude production, with the agreement with Petrobras, with the growing field of refining within Mexico, how does the addition of Venezuelan crude affect Mexican refiners, and how do they look at this new chapter possibly opening up of Western Hemisphere fuel production?
I can say that at the moment, the main producer or refining producer in Mexico is Pemex. So Pemex right now is focused on increasing crude oil production, and as I have said, increasing refining local production. Also, the government has this policy of reducing crude exports to the exterior. So right now, we are not seeing a substantial shift on the Venezuela situation. What we have seen during these months of the Iran-US conflict is that Pemex has in some recent months increased its volume of crude exports because of the price of the Mexican crude barrel. But the tendency is that Pemex is going to revert that dynamic and focus on privileging all the local crude to the refineries, because that is the goal from the government. So we will need to see in the future months how Pemex and the government reacts to this situation.
Thank you so much, Karla. So I think this brings us to the last question of the day, which is pretty pressing, but early on the morning of July 8th, the U.S. announced a fresh round of strikes on Iran, which has caused global oil and gas prices to soar. How could this refreshed conflict impact the market in the Western Hemisphere, specifically in the U.S., in Mexico? Can we talk about that for a little bit?
I think it's going to be more the same. The Strait of Hormuz does not appear to be closed like it was earlier on in the conflict. Now, the ceasefire, for all intents and purposes, appears to be over, based on comments made by President Trump at the NATO summit. But I think, and I've said this a bunch of times during the spring months, the U.S. and the Western Hemisphere, kind of in general, doesn't necessarily have a supply problem. It'll have a price problem. And what's currently happening is, kind of a tide lifting all boats. I think what's happened in the market is a lot of kind of short covering has come out. But, one thing that people are really starting to pay attention to now, in addition to Iran and the U.S., but the constant attacks Ukraine has made on Russian refineries, Russian oil tankers that are sanctioned, oil terminals, things like that, are really starting to kind of chip away and really starting to have an impact, so much to the point that there's talk of Russia banning diesel exports. And that's why the diesel market has reacted so bullishly. I think the diesel market's reacting more so to that than to the announcement that the ceasefire is over on the morning of July 8th. So again, I think prices are moving up. Now, with all that being said, the price of gasoline futures aren't even at a 1-month high right now. They've spiked, obviously, but we're still lower than we were by a few pennies than we were in the middle of June. Again, I think this is going to be kind of a short-term pop in the market, but we'll wait and see what happens.
In the case of Mexico, I guess right now the government still has a room to contain the impact in gasoline and diesel prices. The government has been implementing subsidies to gasoline and diesel through the special tax on fuels called IEPS in Mexico. So we still have some room to use this fiscal measure. And also here in Mexico, we have this strategy to keep the prices of regular and diesel retail prices capped. So that is also another situation that has helped to contain this impact of international prices. So I don't see at the moment that this recent announcement has an immediate effect. We will see in the coming months, but if we have some increases in international prices, the government also has another measure to implement. When the Ukrainian war was impacting all the markets in 2022, the Mexican government also give a complementary fiscal stimulus to gasoline and diesel.
Thank you both very much. And thank you for listening. We will be releasing another episode later this summer. So stay tuned.
We hope you've enjoyed today's insider conversation on OPIS Talks. Join us next time for a deep dive into another industry insider's world. You can find more OPIS Talks episodes at opisnet.com/podcasts or wherever you listen to your favorite podcasts.